What's going on, guys? So we're going to be going over top three option plays for next week. As you can see, we have a lot of companies here that are reporting earnings, so it is going to be pretty volatile. But overall, not many big names. But there's three in particular that we're going to be going over. And the first one, we're going to be jumping right into it. It's going to be Carnival, which reports earnings Tuesday before the market opens. So let's take a look at Carnival. It's sitting at just under $20 per share. It's down 31% in the past year, so it hasn't been doing too well. And as we take a look at the 5-year chart, it really hasn't recovered since the pandemic. So, what you can do with Carnival, I like it for the long term. Once it recovers, it will pay out dividends, so it is a dividend paying stock. But I think there's a lot of recovery with this stock in particular, especially once things start to pick up back to normal. Um, and overall, I think that it's going to take a long time to recover, but it eventually will recover. So I do think that if you're a long term investor, picking up some shares could be a really solid play in your long term portfolio. But you could also do some options plays that we're going to be going over. So let's take a look first at Think or Swim. And we have Carnival pulled up here, and there is an implied movement of about dollar. So we can use that to our knowledge to create what's called an iron condor. And since we know that the price is going to be, the expected move is going to be roughly around plus or minus $1. So it could be either like $20.46 or $18.46 after the earnings on Tuesday. So what you can do is what we're going to do is sell the $21 strike, and then buy the one above it, the 21.50 strike. So that's going to be our call side. For the put side, we want to sell the $18 and then buy the 17.5. So what we have here is a short iron condor, and as long as the price of Carnival stays between $21 and $18, we're going to be making our full profit of $16 per contract. So if you want, you could do like 100 contracts if you have a few $1,000s of collateral in your account, and you can make $1,600 in 1 week just by this short iron condor. If you don't want to do this, you could do what's called as a cash secured put, and it's just a single leg option strategy. Very simple. We're selling a put, we're writing a contract. And since there's an implied movement of roughly about $1, we could sell either the 18.50 strike or the 18 strike. I like the 18 strike. That's going to give you about over a 1% return in 1 week just for selling this put. And if you want, you could sell multiple contracts, collect $120 of premium for $9,000 of collateral. And if you do end up getting assigned on the cash secured put, it's a win-win situation because you're owning shares at a very cheap price, and I like that stock at $18, and I would be happy to pick up more shares at that price point. So it's a very nice option strategy there. So next stock is going to be EVgo. So this is going to be an electric vehicle charging station network, which is going to be very good for the future. As we see with gas prices rising, the need for an electric future is is needed now more than ever, and that's really where we're headed. As we can see with a lot of car manufacturers, as well as some startups, creating tons and tons of electric vehicles and investing a lot of money into their line of product. So EVgo can definitely be a great contender as it provides the charging stations, which is what we desperately need. Um, so it has. Let's take a look at the implied movement. It's gonna have an implied movement of $1.20. So it is gonna be pretty volatile. Investors are expecting a pretty big move. For this one, I'm just gonna be selling some cash cure puts at the $11 strike, because remember we said there's gonna be $1.20 move. If you want to be a bit safer, you could even go down further the strike prices. Keep in mind, there's not many expiration dates for this stock, so we have to choose roughly a month out. And because of that, I think a $10 strike for roughly around 4% return in 1 month is going to be a really solid return. especially at the $10 price point, which is some solid support because that's where it's retested the levels many times. And it has a 78% chance of profit, which is pretty good as well. So I really like this at this $10 strike for roughly around $38 of credit. Next stock on our list is going to be NIO, another EV manufacturer, and it reports earnings Thursday after the market closes. So let's take a look at that. Sitting at a price point of $20, $21. So it had a pretty nice day last week. It ran up quite a bit, 38% in 1 week. So people who are holding NIO are really happy that it's finally starting to gain some traction. But it is down quite a bit in the past year, negative 49%. And we check in the past 5 years, it still is up quite a bit because this used to be a really unknown penny stock before it absolutely exploded during early 2021, where everyone just flooded into the EV space. So NIO, it's definitely a good stock for the long term. And let's take a look at what the implied movement is going to be on Think or Swim. So as an implied, it's going to be a very volatile stock. Implied movement of $2.21. So on this one, nothing crazy. Just going to sell some cash geared puts. For the March 25th expiration, which expires this week. And we're going to be taking a look at some pretty low strike prices because as we saw, it's going to be pretty volatile. And if you take a look at these contracts, implied volatility is through the roof. So investors are really watching this stock and it's going to make a pretty big move. But as premium sellers, we really are going to take advantage of the higher implied volatility because the higher the implied volatility, it means the higher the premiums we're going to be collecting. It's going to be very expensive for people who are buying the options. So let's take a look at the strike prices right here. We have some really good juicy premiums that we can sell options on. $2.20 move. So we can do like an $18 strike for 80% chance of profit, collecting $39 of credit per contract. And we can make some good money on that. That's about 2% return in 1 week, a little over that. So if we sell maybe 5 contracts, we collect almost $200 on $9,000 of collateral. So lots and lots of ways to make money for next week. 3 options plays. The first one being Carnival, EVgo, and then NIO. There's also some other companies like Adobe reporting earnings, but I really chose these 3 stocks because they have a low entry barrier, just being in the $10 to $20 price range. So very affordable. You could play options on it. You can even buy long-term call options like a year out, or you can even buy and hold shares if you're really bullish on the stock for long term. So just be patient on that. So that's about it for this video. Thanks for watching.